Hey, students of iMarkets Live! The following Crypto Academy video is designed to help you understand market momentum. Remember, we're all learning together and trading contains substantial risk. Should you accept the full terms of this disclaimer and responsibility for your investments, please continue forward with the training. This lesson will focus on answering the following questions. Before we really get into things, you can pause the video, read through this, and be certain to minimize any distractions. Before we go too deep into the charts, we're going to talk about momentum and how it relates to you and your life. Momentum occurs within our brain. This can be defined by everything that we think, feel, and believe to be true. What is it that you are attracting into your experience? Why is it that you chose to get started with the cryptocurrency markets? Even if you've only traded Forex or stocks or some other sort of investment up until this point, if you find yourself in the wrong state of mind while you're trading, you are not going to have a very good time. There are many things that you can do in order to shift yourself into a place of feeling good, which is ultimately going to allow you to reclaim your confidence and chart effectively. Whenever you find yourself in a distracting environment, it's going to be very difficult for you to give your utmost attention to the charts, which may result in you overlooking something or not fully understanding specific data that the market is giving you. If you find yourself experiencing anxiety because you cannot afford to lose money, or you're expecting to immediately start generating large quantities of money in your first 30, 60, or 90 days of trading, it's going to require you to reframe what this journey is going to be. There are some things that we can do as traders to really put ourselves in that place of feeling good, feeling confident, and feeling as if we are progressing every single day, which is going to contribute to our overall level of happiness. Something that I like to do, and I implement this on a consistent basis, is using affirmations such as, I am so happy and grateful that every day I am becoming a better trader. There is an abundance of money, and I am deserving to receive. I am so happy and grateful that every day, in every way, I am creating. And ultimately, whatever it is that you think and believe to be true, that is going to reflect how you perform in the marketplace. So be mindful. Now let's continue. Market momentum is the strength of a movement. This can be attributed to the volatility, which is discussed in another training video. However, the momentum is going to vary depending on the market that you're trading. The duration of time that it takes for price to move can ultimately result in a completely new trend being created. You can identify momentum on any time frame and use technical indicators to help out as well. Momentum is often going to be displayed as big bullish or bearish candlesticks, and how the body of these candles look will give us some sort of indication of what could happen next. Now we're going to go and transition into some charts and look at a couple of examples of when we're experiencing momentum. And I'd like you to realize that if you have ever looked at a chart, it's very likely that you've seen momentum in some way, shape, or form. Now, if you've done technical analysis on a mobile device, something with a smaller screen, depending on the time frame that you're looking at, the candles can be a little bit misleading. So let's walk through some examples now to give you a much deeper understanding of market momentum and how it can help you. Right now, we're looking at Bitcoin on the daily chart. And when we look over here to the left, and even backtest and scroll further out, we're able to see how the bullish momentum took place, bringing price from the $1,000 range almost up to $20,000 in a very short duration of time. This bullish momentum that we see, all within these green candlesticks right in here. There are a variety of factors that are going to influence this movement, but during this time, was there any clear indication that you should have been selling your Bitcoin? It wasn't until we reached this peak price, right around $20,000, where the daily time frame gave us some indication that we could see a shift in momentum to the downside. When we're using these higher time frames and developing a deeper understanding of what is happening in the bigger picture, the macro analysis that we do, this is going to give you a better sense of what direction the market could head in once you do start exploring the other time frames. Coming over to Ethereum. Right now we're on the hourly chart. As we can see, there was a period of time in which price experienced bullish momentum. We saw buying and buying and buying and buying until we reached that peak point where there was no longer buyers, and that resulted in price coming down. Let's walk through and see how these candles played out. At this point, when price was just sort of accumulating new orders into the market, bringing new money, trading within a range, there was no momentum for several days. Price was just going up, going down, but there was no clear direction on this time frame signaling where we could see price go. When we see that there is not necessarily a clear direction during the day-by-day trading activity, we started off with bullish momentum, which resulted in a fairly significant trend to form. We reached a tipping point where there was bearish momentum. This was a retracement, people taking profit. And then we entered a period of consolidation, where we were accumulating new money into the market. It wasn't until we did this for several days where there was enough conviction from the buyers to be able to continue the momentum up to higher prices of trading. Now, there comes a point in time where the market isn't going to just go up and up and up, and the market isn't going to just go down and down and down. Momentum can be identified by the way that the candlesticks are forming. How the body of the candlestick is very strong. There's not a lot of wick, and the movement has potential to continue because of the structure that we can identify as well. With the way that these candlesticks print, the price stopping almost as if there was an invisible wall, to then see how rapidly price came down. It's in moments like this where even if we do get a very large wick and then price stalls out, this is giving us a clue of how we could see the move continue to play out. Remember, we're just on the hourly time frame. There are many other ones that we can take a look at, but let's continue with this example for now. We see that price ultimately does end up going lower. So the overall momentum shifted into a bearish market for a couple of days. This whole opportunity right in here, thousands of potential pips, and even if you were investing and physically owning Ethereum, these kind of movements, the patience that it takes for you to wait an extra day or two to get a better entry, ultimately is going to help you with averaging out your position to make the most out of that investment. When momentum has come to a halt, that is when we see the market not necessarily pick a clear direction. We see it trade up and down, but it builds a range for itself. And it could stay in here for minutes, it could stay in here for days. And it's not until we get that shift with the big candlestick down to a specific area of structure. And this is where you're going to start to find other concepts like quarter level theory or Elliott waves or harmonics or technical indicators. These are very powerful in helping you identify the shift in momentum before it happens. But even the candlesticks themselves can give us a pretty good idea of which direction the market is heading in. Just from looking at where the market is right now, we are replaying what has already happened. But when you look at these hourly candlesticks, and this imagine that this was the most recent data that you had to consider when choosing if it was time to buy or sell, is there any indication that price at this point is likely to go up? When we've seen large amounts of sells, when you see shifts like this occur, and price moves down very rapidly, breaking key areas of structure and confirming your bias based off of whatever other technical indicators or theories you use as well, it becomes a lot easier to look at the candlesticks themselves and think based off of what information the market is giving me right now. When I look at this candle, is there any clear indication for me that it is time to buy? Or is it more likely that price is going to continue to move down? Let's take a look at a live trade example that considered market momentum, and so that we can see how the probabilities of our trades can increase when we do consider other components as well. Hourly momentum over here on Ripple correlating with Bitcoin, which is ready to break this structure low. And then, of course, we have our pair continuing to inch lower. We've got the order book where the sellers are dominating our screen. Let's scale that left. Still a low sum all the way down to 682. We can scroll and explore. So 683, this right in here, was there, that order got canceled. Looking at the algorithmic influence from the sellers pushing price down through the Asian markets, it's a nice 5-minute candlestick close, and now we're stopping. So anything other than very large bullish movement, this trade likely going to continue in our favor. Now the move would be a result of market executions. Now on the 5-minute chart, with this bearish candlestick, a really big one, closing like this with the current trend, the 15-minute retail trading time frame, we're going to break this structure within this candle. 30 minutes. Okay, next structure, 679, so 680. 50 pips down from where we are right now. We still have large quantities of sell volume coming into the market. Let's bring it up to the top. We do have some levels. The algorithm still continuing its pattern of coming closer to current price as we push lower into demand areas. 690.84, 0.58, 0.01. Let's watch this go into 689. There we go. It became 2 orders, so we're going to continue with this trade. The hourly, noticing where we're coming to, right? 4-hour waterfall down to the 200 because we have space and structure. Daily, weekly, there we go. We hit the gold zone. The momentum that we see from one movement to the next. With cryptocurrency, it's going to vary, but movements like this are thousands of pips, and we can see that happen in a day. Whereas the foreign exchange market, even though there is a high level of volume, we are very unlikely to see these kind of moves happen each and every single day. So if we wanted to mark up on our chart some key areas based off of where the price has been to help us speculate where price could go to if the momentum does continue in the downwards direction, we can do that by looking left. And now watch and notice what happens at each of these particular price points. As we see the price make its way down, notice how with the structure that we have right here on the chart, we have some wicks indicating that there could be a potential sell. We have candlesticks that are big and bearish. And then once we start shifting down over this whole window of time, 1, 2, 3, 4, 5, 6 hours, big candlesticks, a little bit of wick on some of them that gets filled in, very little retracement to the upside that occurred in those hours, but big bearish candlesticks leading us down to key price areas. And you're going to notice the more time that you put into the charts, the more that you see this happen. Because ultimately, the way that supply and demand works, how the price is going to go from one place to the next, momentum, if you're identifying it on the hourly, you are going to be able to consider what might happen when we look at the weekly time frame and we notice that entire movement that we just looked at from when the price had bullish momentum up to the high, and then we got a shift in direction. It's noticing what is happening on the bigger picture that is going to be able to help you interpret the day by day information and recognize that specific movements, such as this candlestick right here on May 7th, are going to indicate and give us clues for what we could see happen in the next day, over the next few days, weeks, potentially even months. And just because the market has history that can help us decide what price points the market could rise or fall to, remembering that the candlesticks themselves have a story. And if you're looking at a 4-hour chart, that story is going to be different than the hourly chart. Then the 30-minute chart, then the 5-minute chart, and even the 1-minute chart. Because these candlesticks, as you get smaller and smaller on the time frame, may look just as large as some of the candlesticks you can observe on the daily chart. Recognizing what the market is doing and what indications it is giving you for the future direction isn't just applicable in cryptocurrency. You can directly implement this in your Forex analysis. Good example right here of bullish momentum where we see price rise almost 100 pips. We get a retracement, and then price decides to build a range because there was no longer enough momentum to continue bringing price higher, and regardless of the time frame that you look at. The key comes in interpreting the data that you're seeing. In summary, market momentum can be identified using any time frame. Before you enter a trade or make an investment, consider where the market is situated on the bigger picture. In this training, we covered a few different concepts beyond momentum. And that is because all of these ideas are interconnected. And as you become a better trader, you're going to be able to sort through what theories and indicators and concepts of how to trade work for you. This is where you, as a trader, are taking that next step. As you start to allow yourself to explore new ideas, embrace new concepts, take the necessary time that is required to practice so that you can adapt your own unique strategy to confidently approach the markets. Be sure to leverage the resources made available to you, and the most important thing is to stay plugged in. As you implement the information, ask questions and remain open minded, because all trading requires is persistence, discipline,